Okay, 1 day left until Christmas. I mean, options expiration, but it feels like Christmas if you sold options and they're worthless now. What's under the tree this month? That's right, Netflix 175, 170 put spreads. Looks like that death wish isn't going to come true. So the stock is trading at about 180, 150 right now. That gives us $6.50 of cushion for tomorrow. Stock can trade off $6.50, and as long as it finishes a penny above 175, those options are worthless and we get to keep all that money. Thank you very much, whoever sold that to us. We really appreciate the early Christmas present. Okay, enough gloating. Gold, right? Yesterday on the Option Monster webinar, there was Sky Dami, John Najarian, Pete Najarian, Colin Gillis, and Doug Cass. The question of gold came up in the conversation, of course, because gold is the topic in a lot of conversations that people have about investments these days. The bottom line is, for Guy Adami, gold takes the stairs up and the elevator down, meaning it climbs its way up and takes a long time, but the downside happens like that. So, Jim Cramer, very frequently and very recently, has said that you can have as much as 10% of your portfolio in gold. We're uncomfortable with a position size of that big, as you know. We limit it to 5%. Actually, how about 4% of your position in gold? Okay, no more than that. Any bigger than that, and again, you run the risk of seeing that kind of downside, that kind of violent downside. And over the long run, might work out okay, but most people can't stomach that kind of volatility. So if you keep your position size small, then the ups and downs, you can really just let them happen the way that they will. Okay, so what are the ways that we've played gold? In the money call spreads on Freeport Mac brand, of course, had those for a while. We also have the GDXJ and BVN. We hold BVN long, and we're trading around it. We used to sell calls, upside calls, every month over and over and over again. It broke out to the upside. It has been hacked to pieces. The stock traded up to $52 a share, and now BVN trades for around $47 a share. So better than 10% loss from the top where gold topped out, and it's come down since. So what are we doing? Well, over the long run, there's lots of cases for gold. Simple supply and demand is a case for gold, and that's really the thing that Jim did for us that got us off the sidelines and into gold. Okay, BVN does pay a dividend, so while we sit around and collect the dividend, we've traded around it. This month, we've sold 45-40 put spreads in January on BVN for $1.10. Anytime we can get over $1 to sell a $5 spread, we like that risk reward. Okay. It's only about 260 or so off of where the stock trades, so there's not a huge cushion in the stock. But if Jim is right and gold is the place to own and the dip should be bought, then we should be okay. And of course, the exit strategy when you're wrong on a short spread is to roll it down and out, just roll it out. But you can keep rolling the position until you're right. Okay? So we don't mind trading around BVN like that because we have an exit strategy if we're wrong. Okay, so we'll continue to hold the stock long. It's not a huge position, and then we'll sell put spreads against it. The 45-40 in January, that's what we sold. Okay, now GDXJ. We like GDXJ for a couple reasons. The reality is to get more ground with gold in it, you're probably going to have to buy it because the places where gold is frequently found that we know where it is right now in the world is pretty much in Africa. And you run the risk of having your land seized or nationalized or some other form of confiscation just as you get the mine up and running. So the governments of Africa are not the safest place to be mining for gold. So how do the big gold miners grow their ground or their land base in order to pull gold out of the ground? That's right, they have to go buy the smaller miners, which is why we like playing gold via the GDXJ. That's the Junior Gold Miners ETF. We've done the same strategy here as we did with BVN. Big decline in the price of the stock from the most recent peak. We sold the January 2011 36.33 puts. Now, with the GDXJ trading around $40.70, that's actually that's about a 10% decline that we're going to need to see on top of the declines we've already seen. It looks like, as recently as during the day on Tuesday of this week, the GDXJ traded above $42.50. Okay, so it's already had a pretty good decline. We're going to be short that 36.33 put spread. That's only a $3 spread, and I think we took in about 60 cents, maybe 65 cents. I can check that real quick. On that trade, we took in, 65 cents is what we took in for that trade. Okay, so, I mean, for a $3 risk, 65 cents, not so bad, right? It's probably even better on the math, if we calculated the math out, probably even better than the BVN spread. That's a $5 spread for a buck. Okay, so those are the two ways that we like to play it. We do like BVN. We do like GDXJ. Please keep your position size small. Remember what Guy Adami said. Gold takes the stairs up and the elevator down. It's like a Jets game, right? The last 2 weeks in a row. Going into the game, everybody feels good. Team's hot. It's going to be a great game. Next thing you know, the Jets are getting their rear ends handed to them by 40 points. And on the way out of the stadium, people just aren't as polite as they were on the way in. So gold goes up in a very orderly fashion, but when it goes down, everybody runs for the exits, people are rude to each other, and it gets a little ugly. Okay? So sorry if you're a Jets fan, but if you want to know how to trade gold, it's important, for us to be as honest as we possibly can. All right, there you go. How to tame two extremely wild rides. Remember, we told you yesterday about the call spread risk reversal on NetFlix. We did sell out of our buy right or covered calls in NetFlix into the call spread risk reversals. We like that. We got paid to do it. Felt great to take all that risk off the table. Obviously, $17,000 for a round lot in Netflix. Round lot means 100 shares. It's like buying a car. So that's a little bit more risk than we wanted to have on the table with Netflix being all over the place. There is obviously a competition risk to Netflix. In 2011, somebody could come out with another platform. So we'd rather not have that, but we don't mind getting paid. We got paid about $1,425 to put on that call spread risk reversal. We've got a $3,000 potential max upside in addition to the $1,425 that we took in for a max profit of $1,425 or so. Not a bad day at the office, okay? So thanks again for tuning in. I hope your OPEX is set up as good as ours is for tomorrow. Today, after the close research and motion reports, we have a strangle on, very small strangle. I think we're long the 60 put and long the 62.5 call in December. We're basically going to play for a big giant move. If we see a huge move, we'll cash in on the side that we were right on. The other side, obviously, we'll be wrong on. Maybe we'll turn it into a short spread. Probably not with tomorrow being options expiration. But we're going to play it for volatility. If we get a huge move, we take one side off. It should be enough of a move to be profitable for the whole trade. If not, then can't win every trade, right? Thanks for tuning in again today. Have a great day, and we'll see you tomorrow.